off. So we're going to do this machine learning exercise first. So like I've said in the course introduction lecture and on the notes, you're going to need a laptop or a desktop to do this exercise, or maybe a Microsoft Surface tablet might do it, something that's got a proper operating system. So I think I saw yesterday in a different group, someone's trying to do this course on their mobile phone. A mobile phone is not going to work for this exercise, and I have no idea how anyone could do this course using their mobile phone, but maybe you've got incredible eyesight. So my friends, let's get ready. We're going to do some real life machine learning. How exciting is that? And we're joined tonight by Mr. Munn from Code. So Mr. Munn is Code's technical support officer, and he's here to help us out with this exercise if you need any help. And he's also responsible for writing this machine learning application himself, which took a while. As you can see, it's quite advanced. So thanks again to Mr. Munn for doing that. And thank you for joining us, Munn. So the first thing you're going to need a couple of things. You're going to need access to a Google Drive account. And we talked about this last Tuesday, didn't we? So the best one to use is your RMIT Google Drive account. I think most of you, or some of you, well, in fact, I think in theory, all of you who've got an RMIT email account, which is, I think, everyone on this call, can log into Google with your RMIT account and your RMIT password, and you can get into Google Drive. So your RMIT Google Drive is probably the easiest one, but if you don't want to use that, you can use a personal account and get into Google Drive for your personal account. So we want to have either a Google Drive through RMIT or a Google Drive through your personal account. So we discussed all this last Tuesday. Now, if anyone does not have one of those things, Munn will be able to help you out. So ping us now if you don't have access to a Google Drive account. But I'm now going to assume that everyone can get into Google Drive. So I'm going to send some instructions on the chat, and we can work on this together. This is going to be fun, everyone. This is Industry 4.0 for real. What could possibly go wrong? All right. So first move is get the ticker or the symbol for your assignment 1 company. Oops, sorry, I didn't press send. That would help. Get the ticker or the symbol for your assignment 1 company, go into Yahoo Finance, look up your company. Okay, so everyone do that. If you've got any problems, Munn is here to offer advice, and I can obviously give you some support as well. So I'm going to share my screen to my Google Finance so you can see Yahoo Finance so you can see what I'm doing. Sorry, I'm just reading the bad news on the Fed in USA. That's great. All right, so obviously I don't have a company, so I'm gonna look up a company that I'm looking at the moment. This is a British company. It's listed on the London Stock Exchange. It's a cybersecurity company, and they offer cybersecurity consultancy and services. So my company is called NCC. But you should all have looked up your assignment 1 company on Yahoo Finance, and you should be looking at it now. So Please, can I get some response? Send me a thumbs up if this is okay. Send me a message or ping me if I'm going too quickly. How are we going? Oops. All right, looks like we're happening. Right, so now that you're in Yahoo, that's the wrong sheet. Go to historical data, okay, which is the tab here. Click on historical data. And this is basically, as you'd guess, key statistics over a time period. So what I'm going to ask everyone to do, and I'm just going to go through this in a simple version for you to have a go with this machine learning application. For your assignment 1 and assignment 2, when you use this for the real company, feel free to experiment with these parameters. Okay, now since some of you have got companies, I think in the US, yes, most of you in fact have got companies in the US. I don't think they've even started trading yet. So for the time period, change that time period to 16th of March, 2021, 16th of March, 2022. So 1 year's worth of data finishing yesterday. Click done. So I've got 16th of March 2021 to 16th of March 2022. I'll apply. And I'm going to download that data set onto a local drive on my computer. Okay, so I'm going to download that. So that's gone, I'm on a PC obviously, so that's gone into my downloads file, and there's my file name. I'm not going to change the name of this file. So that's a comma separated values file, CSV file. ncc.l is the ticker name for this company on Yahoo. So that's the file name. So I'm just going to wait there and let everyone catch up. And I've put simple instructions in the chat. So how are we doing? I'm assuming that everyone's doing this with no problem. You're all machine learning experts. Nothing could possibly go wrong. All right, the next step is very, very easy. Take your file from your local hard drive or your local drive and upload it to your Google Drive. Don't put it in a folder in Google Drive. Don't put it in a subfolder. Don't put it in a directory. Just put it into what we call the root directory in your Google Drive. So just drag it into Google Drive and let it upload. Don't change the name. Don't put it into a subdirectory. So I just sent that next stage to you in chats. All right. Muted me in the meeting. That's very clever. Please don't do that again. So now we're going to have a go with our machine learning program. So everyone's got that file 16th of March 21 to 16th of March 22 data range on your G drive. Okay. So next bit, if you are using your RMIT G drive, sorry, your G drive of your RMIT account. I have just sent you a link. So if you're using your RMIT account, which is what we click on that link and don't do anything. I'll be with you in a second. If you are using your personal account to get into Google Drive, I've just sent another link. All right, so don't get confused here. If you're using your RMIT email and password to get into Google Drive, use that first link. If you're using a personal account to get into Google Drive, use the second link. I'm using my RMIT account, obviously. So I'm going to open the RMIT version, and hopefully you can all see what I'm doing. So everyone is now looking at a screen that looks something like this. Man, are you seeing that on your Teams?
Yes, I do.
Fantastic. Okay, thank you. All right, my friends. This looks complicated. Actually, it's not too bad. So you're going to see slightly different information if you're using your RMIT account or a personal account, but it's kind of the same thing. And remember, if any of you can't get to this application, Mun can actually help you out. You can use his computer remotely. So that's an option for this session. So all the instructions are here. So if you want to come back and use this machine learning application later, that's why we've done it. Let me just give you the warning that I give every time we use this. Okay. This is a training application only. A real machine learning software that financiers and investment bankers use is obviously much more sophisticated, much more expensive. This software that Man has developed is just training software so you guys can get an idea what machine learning can do, and particularly why it's so helpful for us as business leaders and entrepreneurs. We normally find when we use this software, some of you will find very, very accurate forecasts. Some of you won't, but some of you might find this software gives you incredibly accurate forecasts. So my very serious grown-up warning to you is, this is a training package. Do not use this in real life because you will lose money, friends, family, house, children, dog and cat. This software is not designed to be the real thing, but it might give you some very accurate results. Do not use it in real life. All right, so this is a training package only. Right. Scroll down, and effectively there's a set of instructions here, again, to help you when you come back and use this yourself for your assessments. So the first thing we're going to do, we're just going to do it step by step. So number one, import dependencies is basically going to tell your computer to speak to this software. So there's a little play button here. So when you're ready, press that play button. And if you're logged in with your RMIT account, you're going to see this message that this notebook was offered by Mun. That's Mun who's in our class right now. And if you're using your personal account, you'll see a similar message. I think it's a DLT code at Gmail account. It's our account. So run anyway. And let's run this. So this is now telling your computer to speak to the machine learning application. All right. Now let's scroll down a bit more to number 2. Choose a stock symbol. You've already done this. So Mun has put in here an example of doing this with Grab, but since you're working with me, we've already got your data. So scroll down to where it says file name Grab and the dates. Make sure your caps lock is on your keyboard and put in the name, your ticker for your company. So this is my one. I think we've all got the same dates, which will be 16th of March 2021, 16th of March 2022. If some of you have got a company that's listed for less than a year, obviously your dates are going to be slightly different. All right, so you put in your symbol, your ticker. Don't put .csv, make sure it's upper caps. Put in your start and end date, and we're pressing play. Oh, I've got a problem with mine. Oh, it's because I didn't upload it to Google Drive. Idiot. Sorry, just give me a second. I forgot to actually upload it. Okay, I'll run that again. Excellent. So you'll know when it's worked that you'll get a green tick next to the play button. If you get a red cross or the play button goes red, that means there's an error, and let us know and me or Mun can help you out with that. All right, so now this machine learning program has imported 1 year's worth of trading data from your company, from the Yahoo Finance website. Okay. We now scroll down to section 3, prepare the data. Now, I'm not going to explain how probability works in this class, although it's quite interesting. But in basic terms, the more we ask the software, the longer the period we ask the software to make a forecast, probably the less accurate it's going to be. It's a little bit like the weather forecast. I can forecast the weather for tomorrow with some accuracy. Next week, maybe. 2 weeks' time, my forecast is not accurate. It's a guess. So it's kind of the same here. But what we can do, if you click on, see this gray bar? So don't press play yet. Click on this gray bar. And I think it defaults to 3. But you can change the number of days that this software is going to try and make its own forecast based on the data. So I'm going to stick with 3 because that generally works with me. If you want to go up to anything up to 10, the higher the number, the less accurate it's probably going to be. 1 will be hopefully moderately accurate. And there's a little box there called forecast future that should be ticked. All right. Okay, I hope you're with me so far. Now we're going to scroll down to number 4, called fitting and training. So this is basically where the software is going to start doing its thing. All right, so all we have to do is press play. Simple as that. That's a very quick part of the program. Now this is when it gets interesting. So forecasting and visualizing results. So what we're going to do now is instruct this software to do a machine learning algorithm process on our data. Now, Mun has programmed in 3 different types of algorithms. Again, I'm not going to explain them to you in detail because you need a little bit of maths for it. But the algorithms are all quite different. They behave in different ways. And these different algorithms are generally used for doing different things in machine learning. but we've put all of them in here so you can experiment. So I suggest that you start off with an algorithm called k-nearest neighbors. There's a drop-down box here. It's 3 different algorithms. So if you select k-nearest neighbors and press play, I've got the green tick. Fabulous. Now let's look at the data. So I asked the software to make a forecast on 3 days worth of data. So you've got 2 curves here. The blue curve, there's a legend here. The blue curve is the actual data that you've downloaded from Yahoo Finance of the last 3 days. So that was Monday the 14th? Yeah. So there's 3 data points here, which is Monday, Tuesday, and Wednesday. I think that's right. So the blue line is the real share price for this company on Monday and Tuesday and Wednesday of this week. The orange line is what the machine learning algorithm forecasts the share price to be based on the last year of data. So along the x-axis, which is trading days, 250 is the 250th day of trading in the last year, which I think was Monday. 251 is Tuesday, and 252 was Wednesday, yesterday. So what we see here is that with this algorithm, k-nearest neighbors, with this machine learning algorithm, the actual data and the predicted data are not exactly the same, but you can see the pattern is the same. Rising up on the 2nd day, leveling out, dropping back down on the 3rd day. So the machine learning algorithm has been able to predict the pattern of the data. And that's often what machine learning we use it for, looking at patterns and trends rather than exact amounts. Okay, let's pick another algorithm. I'm going to go decision tree regressor. So this is a different type of algorithm. K-nearest neighbors is often used for, say, something like image recognition or image differentiation. Decision tree regression is used for classifying different things sometimes. I won't get into that. So now I've picked decision tree regressor, press play again. Okay, so this is interesting. So on the decision tree regressor model, which is a different algorithm, the actual data and the predicted data are exactly the same for Monday and Tuesday. So the software has correctly forecast the share price for this company from last Monday and last Tuesday. For Wednesday, yesterday, it was slightly wrong. So you see the curve diverging, the blue and yellow lines go in different directions. But for Monday and Tuesday, the software was exactly right. Interesting. And then the last algorithm we're going to use, which is linear regression, which some of you, if you've done statistics, I'm sure you're familiar with linear regression. And this is probably the most appropriate algorithm for this kind of problem. Press play again. Yep, similar. The algorithm's seen the trend, but it hasn't got the values right. So my most accurate one was decision tree regression. So I'm going to go back to that. I'm going to press play again. All right, so I now know using this software for the last 3 days of my company, NCC, cybersecurity company in London, quite an accurate forecast from the software using the decision tree regression. So the thing that I'd like you to do, certainly in assessment 2 with your individual companies, and if you want to try an assessment 1, that's absolutely fine. The last part of this software, which Mr. Munn has written, scroll down. This is when we're actually going to use the software to look into the future. All right, and this is this is where you can lose a lot of money. So don't do it for real. So I'm going to ask the software to forecast the share price of this company, its closing price, one day in the future, which is actually today. But they're still trading in London, so it's still looking to the future. So I'm going to ask it to look one day in the future. I'm going to use a decision tree regression because that was most accurate. I press play. Boom. And that is the predicted close price for actually today. So we've gone through this process, and the machine learning algorithm is now suggesting to us that the price of this share at 5 p.m. tonight, is it, on the London Stock Exchange, will be 186.4, which of course I'm going to check tonight. Oh, well, tomorrow actually. All right. So there you go, a real life machine learning exercise, which I'm expecting that you will certainly all do for assignment 2. And if you want to get into assignment 1 as well, that's absolutely fine. Right, so let me go back to here. Okay. Man, I see you've been quite busy. Oh, Chung, you got it. Yeah, you got a null value in your data set. I've been getting some of those recently as well, Chung. Man and I were looking at this yesterday, which we weren't getting them so much before. So I don't know if there's some some error in some of the data transfer, but yeah, that's something we experienced. All right, who got a result that was close? Who got a result from the algorithm? Oh, let's have a look at bins. Oh, you got an index error. Man, can you look at that one from bin?
Sure. Let me take a look.
Thank you. Who else got close? Did anyone else get a good match? Actual price is higher than the machine learning predicted. Okay, by a lot, or was the trend correct? Oh, fantastic. So Hung, you've got 5%, Hui, you've got an exact match. See, this is what happens. This is how it starts. I'll just invest a little bit of money on the share price for tomorrow because I know what it's going to be. 14% out. Hui, which algorithm were you using to get 14% variance? Decision tree. Okay. What did you get with linear regression? Yeah, have a go with that. Because again, in theory, linear regression, and for those of you who know stats, linear regression is we're trying to find the the best match between multiple varied values. Higher variation. Oh, that's interesting. So you and me both got better results on decision tree. And an opposite trend. Okay. So so obviously a lot of you are understanding this, which is great. And I mean, it's not that complicated, actually. Once you try this a few times, it's quite remarkable what you can do with this software. Now, the reason some of you are going to get variations, and I'll give you this advice, is a little bit more advanced, but if you studied statistics, then you've got no problem with it. Again, it's kind of a bit like the weather. If I know that the weather on Monday was sunny with no rain, and I know that the weather on Tuesday was sunny. Oh, sorry, let me just mute my mic. Sorry about that. Let me try that again. So again, with our weather prediction, and machine learning is used a lot for weather forecasting. If I know on Monday that the weather was sunny with no rain, on Tuesday the weather was sunny with no rain, on Wednesday the weather was sunny with no rain, I've got a pretty good idea what the weather tomorrow is going to be like. However, if on Monday the weather was sunny with no rain, on Tuesday it was cloudy with some rain, and on Wednesday there was a very bad thunderstorm, then it's much harder for me to be confident about the weather tomorrow. And you might find that with some of your companies, the same idea with the share price. If their share price is going up and down and boom up and then boom down, the predictions become much harder to do. But if your company's share price over the last year has been more even, the forecast prediction is a little bit easier. Now, the issue for, I think, almost all of you with your companies is that the last year for your company has probably been quite, because of COVID, obviously, has probably been quite up and down. And that might explain why you're not getting such good results. So if you've got a company that's been around longer, take a longer sample of data. Take a sample that's longer than 1 year. Dong, you've got error from step 3. Oh wow, Cindy, that's, yeah. There you go. So now, now you know what software you could use to invest your money on. Okay, well that's great. So a few of you've got 100% prediction, which is, this machine learning stuff is, we're using it for share price prediction. You can use it for a whole bunch of different things. And people are, machine learning and business, it's transforming business. A lot of what's behind Industry 4.0, in my opinion, is down to machine learning. All right, well done, everyone. So I think what I'm going to suggest now is that, Man, if you don't mind staying on and offering a little bit more support, I'm sure people will continue to ask you some questions. Is that all right with you, Man?
Sure, I'll be available here.
Okay, so Man is going to stay on, so feel free to speak with him directly. What I'm going to suggest we do now is get ready for your reports on your first stage analysis of your companies. So I think everyone's now prepared your 1-minute overview of your industry. And you're going to just briefly explain the company or financial performance indicators you've used and why. So let's get into that now. And I'll give you as much feedback as I'm able to. So I looked in everyone's Teams channels just before we started, and I didn't see any files in anyone's Teams channels. So I guess you're just going to share data straight from your screen. All right. So let's go by the numbers. Team 3D, are you ready to just give us an informal quick overview of 3D printing and tell us about your performance indicators? Over to you, Team 3D.
Hello, hi, I'm from Team 3D and I'll be presenting to you guys today.
Thank you very much, Em Thuy. All right, so how do you want to do it? Do you want to share your screen? What do you want to do? We're here to help you.
I'll share my screen. I'll just I'll open my file first.
Go for it, take your time. No pressure being first.
Oof. Okay. Can everyone see my slide?
Super clear.
All right, thank you. Okay, hello everyone, my name is Tri, and today my team is presenting to you 3D printing technology. In definition, 3D printing, or also known as additive manufacturing, is a process of making three-dimensional solid objects from a digital file. And we believe that it's one of the leading emerging technology of Industry 4.0 for the reasons that its use and implementation combined with other technologies is producing an evolution in the industry towards an intelligent production where machines, systems, and network are able to exchange information and respond to the system of production management. Moreover, it eliminates the need of expensive tools and fixture, reducing post-processing material waste and human intervention. So these are the characteristics that we believe define the industry of the future. These are the financial performance measures that we looked at. We chose these because I think they, well, first of all, it was kind of inspired from what we did in our class, and also they give us a good presentation of how these companies are doing financially. We look at market capitalization, profit margin, revenue, EBITDA, and gross profit. As you can see here, some of, for example, the company Organovo is, we can assess how which stage of the company at by looking at the numbers on these financial statements. And finally, we had a SWOT analysis for our industry. We looked at the strengths. The financial statement helped us see that some giants, the strengths of the giant company, they have a market cap over around 1 billion USD to up to 2.1 billion USD. We can also see that most companies are focusing on research and development because also, although the gross revenue are relatively high, the EBITDA are quite low. For example, 3D Systems Corporation. We did a little research on our own and found out that they put around $69 million into the research. And we can also, I'll move back to the weaknesses. The profit margin is not too high, with the exception of only one company. But the rest is are maintained to be quite low at up below 10%. This can actually, well, one of the explanation for this problem might be from, for this decline might be because of COVID and a decline in demand for 3D printing during this time. But it is believed that this will improve in the future. Other weaknesses are the recent stock price is also on the decline. We looked at opportunity and threat from analyzing the past. The opportunity are having support from government, growing trends for personal creation work, cost of production is declining, new printing technology can increase print speed to up to 100 times. The threats are copyright issues, and industry worker needs skills worker, and it's still there's another upcoming technology that is 4D, and it will be there will be a reduce in the workforce with the effect of demand and supply chain. That's it for presentation. Thank you for listening.
Thank you very much. Well done. Leave your screen on share if you don't mind.
Yeah.
All right. So let me give you some feedback. So my friends, this is where you start working. This is an advanced course and it's an advanced subject. So I'm going to give you advanced feedback. And I'm going to do it in a very direct way. And that's how we're going to work throughout this course. Because we're entrepreneurs and we're looking at the information, so I'm not saying what you've done is wrong. I'm just going to be asking you questions about your data analysis, because we're all professionals here, all right? So my advice to you and everyone else is, and this is, look, this is, like I say, this is advanced advice. The first 2 bullet points here, every single team can say the same thing. So by the time we get to assessment 1, and this is everyone, I expect you to know quite a lot about your industries. I expect you to know who are the major companies, who are the major projects, which countries are investing in it, which companies are investing in it. For all of your technologies, that's why I picked them. So really, by the time you present, we've still got plenty of time. We've got 2 weeks into your presentations. I'm expecting your team to know a lot about 3D printing, the opportunities in the market, the players, the winners, the losers. Same with every other team. You know, this is an MBA course. It's a course on digital entrepreneurship with a lot of technology. You're all smart enough to know quite a lot about your industries by the time we get to assessment 1, and that's what I'll be expecting. All right. So what you were saying, M2E, was quite interesting, but this slide, like I say, the first 2 bullet points, every team can have the same bullet points. So I know we're just beginning, so I'm just giving you some more advanced feedback. Let's go to your SWOT, please. All right, now you've done a little bit more than I asked for, which is great. Now I'm just going to give, again, advice to everyone, because I think a few people are confused about this. For this course, we will only use SWOT for an individual company. We will not run SWOT on an industry. It is possible to run SWOT on an industry, but we're not going to do that. Okay, so we're only going to run SWOT on individual companies. We will not run SWOT on your industry. So what you've got here, M2E, is probably a little bit more like a PEST. And we're going to talk about PEST today. So you can kind of cheat and change this around and turn it into a PEST analysis. And we'll talk about that later. But we're not going to do SWOT on a whole industry. Let me tell you something else. So at this stage, the financial SWOT method that you're learning at the moment, you can only really talk about strengths and weaknesses. Opportunities and threats we'll have to do later. So a lot of what you've got here is correct, but like I say, we're not going to use SWOT for an industry on this course. All right, but you'll be able to use some of this information for your PEST, which is your next exercise. All right, now let's do the tough bit. Let's go back and have a look at your numbers. Okay, look, well done on these numbers. So again, the point I've got to make to everyone is that, oh God. Sorry about that. So we started off last week. You all practice a simple financial SWOT, and you know we did an overview and an introduction to basic corporate finance and performance measurement. And all of the companies we looked at last week are all normal companies, stock exchange listed, have been trading for a while. For assessment one, for this whole course from now on, we're not looking at normal companies anymore. We're looking at tech players, and we're trying to assess if and when they're going to hit an inflection point. So remember, for a normal company, yes, we want so much revenue, and we want a net profit margin of around 10%, give or take, plus or minus 2%. You know, we want a certain financial ratio between EBITDA and revenues, blah, blah, blah. For entrepreneurial tech companies that I've just listed, no. The normal rules do not apply, particularly when it comes to profit margin. So I think I mentioned this before, and I'm certainly going to mention it again many times. According to the legend, Tesla took 18 years to make an annual profit. And I'm not sure that SpaceX has made a profit yet. But if you look at the share price of Tesla, no one cares. So for tech entrepreneurial companies recently listed, the way that we consider net profit and revenue is very, very different to a normal company. Okay. So you've decided to use market cap. How market cap can help us, and I think you've kind of understood it here. And the information you've got here on market cap allowing investors to size up a company, kind of, yes, that's kind of correct. It's not bad, actually. So the questions that all of you have got to be asking yourself, you know, not just for this exercise, for your professional business careers. I'm sorry, I'm just going to check. Mun, are you still there, or have you logged off? I'm happy for you to log off, by the way. I think he's gone. Yeah, Mun, he's done a tremendous job on a lot of code projects. We're very lucky to have him. So what was I saying? So with market cap, which we know is number of shares in circulation times value of shares. So who had Faro Technologies? Which one on your team had Faro Technologies? Can you come on? M2, who had Faro Technologies in your team?
I think it's Queen. I'll message her right now.
Queen, are you with us or not? Okay, if you're not here, that's your loss. So I'm not going to talk about Faro Technologies. Let's look at Stratasys. Who's got Stratasys?
And I've got it.
You've got Stratasys. Okay.
Yes.
So the question you should be asking yourself, or maybe you already have. So Stratasys has got, in this group, a reasonable market cap.
Yes.
Okay, nearly 1.43 billion, a little bit under Proto Labs. Do you know the company? Do you know exactly what Stratasys does?
Yes, they do computer hardware and software for 3D printing.
Okay. Do you know who their main clients are?
It's a business-to-business company, so
okay.
I've seen
So
them
by
do.
the time you get to assessment one, these are the kind of questions I'm going to ask you. Who are the main customers? Who are the main clients? Who are the main markets? And that's certainly what you'll be explaining in assessment two. You've You've got to show you're an expert on this company. You know this company. You know where they work. You know what they do. You know who runs them. You know what to do next with them. That's what you've got to demonstrate an assessment to. All right. So you've got a 1.4 billion market cap and you've got -10 on your profit margin. So why didn't you put a red on your profit margin?
Well, compared to Faro, it was slightly higher, but well, I found out that their profit margin was, they attribute this decline in profit margin. It's due to COVID and decline in customer utilization.
Who's got Materialise? Are they with you or did they not? Were they not able to participate?
Materialized. I'll get them on right now.
Okay, so the point I'm trying to make here is that Stratasys has got -10 on its profit margin, but you haven't said that's a weakness, and you're correct. In principle, it doesn't have to be a weakness. And the market seems to agree with you. The market valued Stratasys at 1.4 billion, not bad. So the market clearly doesn't mind that they've got negative profit margin. And there's going to be a very good reason for that, and it's going to have something to do with the company's intellectual property. It's going to have something to do with some forthcoming contract. There's something that's so strong about this company that it's got a 1.4 billion market cap and it's still losing money, losing profit. So you've got to find out what that is, because this could be the sign of a company that might be coming to an inflection point, and it might be that the market thinks it's coming to an inflection point. All right. So for Stratasys, I think that's not a bad analysis. EBITDA, you're probably right. That is a little bit. Again, you'd find out why the EBITDA is that low. You've got to find out why. Protolabs. I might have a bit more love for Protolabs than you've got here. Organovo, yes, you've got reds there. So and now you've got to go back into the company and see why has it got those reds? Where is it on the S curve?
We actually know exactly why it's got the.
Please do.
Yeah. So it's a company that specializes in developing bioprinting, biofabrication. Yep. And it's still very early in the booming research and development stage.
Fantastic. All right, so let me stop you there because I don't want to talk too much about the individual companies. But when you see a set of reds like that and a new and quite exciting technology, this might be the company to look at. This might be the company that's coming to an inflection point. So actually, the point I'm making here is that a lot of reds, a lot of weaknesses can be a signal that this might be the company that you want to look at. All right, so I'm not going to say much else because I've already given you a lot of feedback. Great first attempt. You're going to probably need to have some more complicated measures than you've got. The measures are super basic. So maybe do a little bit more research into some more advanced measures. Excellent, well done. Thank you very much. Well done to you and the team. Okay, team 5G, please tell us about 5G. Do you want to stop sharing your screen to me? Oh, Man, you're still here. Sorry, Man, we're just saying thank you very much and please enjoy the rest of your evening. Thanks for your help.
Thank you, Jerry. I see you all again soon.
Okay, thanks very much, Man. Team 5G. We're excited and we're ready. Gosh, that's impressive. Team 5G, take it away. We can't hear you, by the way.
Oh, hello. Yeah, I don't think we have 5G
Yes.
yet, so we're still in Vietnam, so the technology kind of slow. So we're hoping the 5G will be coming to Vietnam soon. But thank you anyone for waiting for our loading presentation. So we are doing the 5G, and then we're thinking like this one is fit current right now for the industry 4.0 because like we are transition from the 4 point or the LTE to 5G, and then it will have with the faster connection, better security and lower latency, and then it's beneficial because like you can do with the better artificial intelligence, and then like especially for healthcare when you can operate like online, and then you can do for like car also like auto driving car. So I think those are the beneficial of the current industry for the 5G, and then especially for the streaming too, because like it boosts it faster, and then people can stream more, and then you can download and make everything faster. So that's for the quick introduction about the 5G. And then for the SWOT analysis, we are thinking we kind of confused about how to do this one, but like we look at the basic, and then we are thinking like, oh, there's some kind of thing we need to do. Like we should look more about like the liquidity or solvency and the operating efficiency of each individual company, and then we try to compare it back to like to the industry. How does it affect the industry? But for right now, when we look at the operating margin, we think like kind of low. The profit margin is kind of low because like this is the new industry, so people pay more for the cost, and so it results in like negative number or something like that. So just for this kind of number, we're just going to use for the strength and weakness. And as for the opportunity and the threat, we are thinking like we should use something else like the past analysis or something like that to look deeper into the industry, because they're gonna get affected like what about politics, and then which country are they allowed to do that, and then what are the technology they can do it. So that's it for now for our 5G group, and then thank you everyone.
Oh, Team 5G, well done. It's a very strong start by Team 5G. Well done, everyone. Yeah, great first attempt. Well done. So that's, again, that's the sort of, so you see there were Team 5G. They just gave a very quick overview of the technology and the potentials of the technology. And it shows me that they kind of know what they're talking about. It's very important. It's very important for the entrepreneur, particularly when you're trying to attract investment or backers or even staff. You've got to understand what you're talking about at a high level. So Team 5G, I'm not going to ask you this question now, but the kind of question I'd ask you in your presentation for assessment 1, your in-class formal presentation, the kind of thing I'd ask is, okay, so why is what you've told me about 5G, why is that different to what everyone said about 4G 10 years ago? So that's the kind of question I'd ask you. I'm not going to ask it now because that's a really difficult question, but that's okay. It's a valid question. This great job. Love the chart. Fantastic. And 5G, yes, very much. It's enabling technology to a certain extent, so is 3D printing. And cybersecurity, very much enabling technology. Oh, and obviously I've done that for a reason. Let's have a look at your numbers, please.
Okay, thank you, everyone.
Sorry, can we just look at your numbers? Your other slide? Yeah, okay. Why did you go for liquidity ratio?
When I was thinking about this one, because they are trying to do the transition, and then they are building like more factory right now, and then the network. I think they're gonna try to like borrow money from the bank. But like when I look at the current ratio, I think the number is good enough. That means like when we invest in this company, I think it's safe like they can pay it back to the bank, and man can make profit in the future. That's what I'm thinking about the current ratio.
Okay, and why debt equity on the solvency? Why are you looking at that for a tech company, for a 5G company?
Because like for the 5G, I think like it's just like an enabler for the other company to do the business rather than they are doing the business by themselves. Because like for only right now, the top leading country with the 5G is America, and then in China, and then they have some in Japan and then Korea too, like SK Telecom, but like it's very small right now. And then people still going to use 4G in the meantime for them to expand the area. So when I look at the DE ratio, I'm thinking like, oh, they are able to borrow that money, but they are able to pay back. So it's kind of significant to see like, oh, these companies maybe working well to expand globally.
Okay, which company is it? What's the bottom line there? Who's got 721 million on the market cap? Which company is that? Do you know the name of the company?
That one is from the Sierra Wireless.
Oh, that's Sierra Wireless. Yeah, okay. I think I pointed this out to you in the email. Why do you think they've got the highest market cap from this group?
I was thinking like they start early. That's
well,
what I'm thinking about.
Probably not. Right. So this is the same point, and I think I'm going to make this point to all of you, every team, because it's certainly the same point I made with Team 3D. You've got the highest market cap from this group, and these are all kind of similar companies. I picked them for a reason. You've got a negative 19% profit margin, and you've still got a high market cap. So you're going to have to understand that. You're going to have to understand that the market obviously likes this company and they don't care about the profit margin because it's a younger tech company. So I'm going to have to keep saying this, but you're all going to have to understand this. And it's the reason I've done this exercise. For a normal company, negative 19% profit margin is really, really bad news. It's definitely a weakness. But for these kind of companies, it is not always a weakness. And you have to understand that. Because obviously the market, I mean, they're not over 1 billion, but 721 million market cap is not bad. The market doesn't seem to care about that profit margin or the operating margin. So you're going to have to understand what's going on. Do you know what I mean? And that's a little bit more advanced, but that's what I'm saying to everyone. Again, it's a Tesla example. Tesla didn't make a profit for nearly 20 years. One of the most successful companies that's ever existed. So as entrepreneurs, you've got to try and understand and use these numbers in a different way. All right. Look, and you're quite right about opportunities and threats. We will do PEST for that, as I think we mentioned. Well done. That's a very, very strong start. Fantastic, fantastic job. Okay, thank you very much. Well done, team. Team cybersecurity. We're ready for you. Team cybersecurity, are you with us? Just pop us a message if you're loading up, so we know you're here. Is that you?
We're here.
Okay, we're ready when you are. We're ready for your wisdom.
Just for a minute.
Yeah, no problem. We need 5G.
Yep. So do you see my slide?
Yes, very clearly. Thank you.
Yeah, so my name is Trent Lloyd. So I represent about the cybersecurity companies. Here's about a summary about the cybersecurity industry. So cybersecurity is practice of protecting system, networks, and programs from digital attacks. And the goals of these cyber attacks is usually to access, alter, or destroy sensitive information. Just for example, that we are study online, we can the material learning can be leaked out from MIT to other university around the world. And cybersecurity system integrates security product and accelerate critical security operational functions such as detection, investigation, and remediation. So without a strong protection in place, bad action can take advantage of system for industrial espionage, intellectual and property thieves, or IP leakage, or even production sabotage. And why cybersecurity is important. So the connect of the concept of service 4.0 is based on the Internet things. So as the cybercrime increase, cybersecurity become a potential role in the industry. So for example, that in nowadays manufacturers they all use robot to produce or to manufacture many kinds of products, CDs, or many kinds of important information for government as well. So cybersecurity is the one that can protect all the information or the key elements in the system or in the supply chain to protect the key information or the key element of a companies. So COVID accelerated the adoption of digital business method, which also accelerate the crime rate. So cybersecurity is more important than ever. So as you can see here in the pictures, that cybersecurity can work available in computer security, online privacy, security padlock, camera, secure payment, antivirus, firewall, and mobile security as well. So here's the summary of those 5 companies that we analyzed yesterday. So as you can see here, the profit margin is almost negative, but the Tesserent Limited companies is accelerate the highest revenue in those 5 companies, which is 82.79 million Australian dollars. So now we will move on to the SWOT analysis. So the strength of this kind of cybersecurity industry that we can have low debt, and in AI market full potential ahead as it is a new market and COVID push the change faster and low liability risk both short and long term. And about the weaknesses, we have negative profit margin, very low EBITDA, and young company compared to other fields. And about the opportunities, since the COVID-19 pandemic, many students stay at home to learn. So this makes the company has a new market to grow, which also is necessary to secure the personal information of the student and the authorized books, as well as the learning materials. And recently hired new board members looking forward for positive changes. And about the threats, although the company is in is enough money to burn in 18 months, but at the rate of losing money in the future, the company won't have enough cash to run in the long term. So we also faced with the limit in the customer expansion, threaten the company's sales growth, and the shortage of the capital limited the company's R&D, which might cause the competitors to catch the company's technology. So that's the end of our cybersecurity company's part. Thank you for listening. And do you have any kinds of questions?
Of course, I have questions, lots and lots. Thank you very much. That's great. Just to go back to slide number 2.
Yeah.
Okay, so again, this is a great start. Well done. You've obviously put a lot of effort into it. So well done to you and your team. In 2 weeks' time, when you're presenting to me for assessment 1, I need a much higher level of knowledge about cybersecurity. So these are great general points, but you'll need a much higher level of knowledge. So this is fine for your first discussion and formal presentation tonight, but I'm going to need a lot more knowledge for you. Just go to your next slide.
Yes.
So this starts to get a bit interesting, and you're quite right. The Internet of Things and cybersecurity go together. So cybersecurity is another enabling technology, and you've made the point quite well. Once we get automated factories, well, we already have VinFast has got some automation in their factories.
Yeah.
Having robots and automated factories, you're going to need very, very serious cybersecurity because it will become possible to hack a whole factory. And a lot of people haven't realized yet, actually. So this is better here. Well done. Now, just go into your numbers because they're very interesting. The next slide, please. So I didn't check Whitehawk carefully enough. So I didn't realize it had a minus 107 profit margin. That's quite unusual. And Family Zone is 195. I think whoever's got Whitehawk, look, you've done the right thing. I mean, 107 negative profit margin is concerning, obviously, but like you say, these are young companies. A 195 for Family Zone Cyber is, yes, that is quite interesting. But it's got a reasonable market cap. I mean, that's one of the reasons I put Family Zone Cyber Safety in, because it's such an interesting potential. So Family Zone Cyber Safety, it's got the, oh no, sorry, BrainChip's got the highest market cap. So Family Zone's got the second highest market cap, and yeah, okay, that's a very interesting. That's going to be an interesting analysis. You haven't got enough performance numbers, so look, team, you are going to go and have to do some revision about performance measures. You've used the same ones that I used in week 1. That's not enough. Particularly with these companies, you've got some very serious negative profit margins. There's no other way to do this. You're going to have to revise your business knowledge and add some other measures to this, because you can't use the four same measures I used last week. It's not enough. But good start though. Just go on to your next slide. Slide number 5. So I'm just gonna highlight something here. It's the same thing I said last time.
Yeah.
It is not a weakness that they're young companies. It is an opportunity. I've done this for a reason. I'm giving most of you who've got quite young companies, because remember our lecture from Tuesday, it's about companies before they get to the inflection point. I'm not expecting you to recommend a company that's hit the inflection point. I want you to recommend companies before the inflection point. So a young company is not a weakness. It's a great opportunity. These are not normal companies. These are digital tech companies, and we like them young before the inflection point, because that's when we're looking for entrepreneurial opportunities. All right, so look, you've done a pretty good job, but you're going to have to do more work on the numbers. And I'm not going to tell you.
Yeah,
You're
thank you.
have to do that work yourself. Well done. That's pretty good, team, actually, and some very interesting companies. Team DLT, will you please join us?
Thank you so much.
Thank you. Well done, the team. Team DLT, you completely rejected the fun crypto companies I gave you, and now you've got into hardcore DLT. Share with us, Team DLT. Impress us. Has anyone seen the film Deadpool 2 when they're interviewing the superheroes and they're not sure if the Invisible Man has turned up or not? That's how I feel with these things. Team DLT, are you actually here? Okay, Team DLT, I'm not hearing anything from any of you, so I think you've just blown it, and we'll go straight on to Team EV. Team EV, I know you're here, so over to you.
Let me share a screen with you.
Please do.
Can you see?
Good. I could, but it went away again. Yep, that's it.
Yeah. So this is our presentation about the electric vehicle industry in the USA, because most of our companies are based in the North America market. So some information about the industry, passenger vehicles use. So why is it the future? Because it is environmental friendly. It helps minimize the imported petroleum for certain countries, and it's environmental friendly. It helps to cut down emissions. So we believe that EV is the future of our humankind. Once the facilities and infrastructure are ready, it will grow really fast. So there are currently 44 major EV manufacturers in the US. And so these are the companies that we got. Guys, do you want to present your own company? So I will go with mine first. So mine.
I don't think we don't necessarily need the companies because that'll take a little bit too long. We just need an overview onto, well, you've given us an overview on the market, which is fine. Tell us about your numbers and why you've picked these numbers.
Okay, so we think that these are the important financial factors. We haven't decided which are the most important, but we think these are the important ones. So
why have some of you got cost of revenue and some of you don't?
Sorry, what?
So column K.
Okay. Oh yeah, because we just decided to put this in. So some of our friends didn't have time to calculate it.
Why have you decided to put in cost of revenue?
Because from our observations, we can see that the EV, like these EV companies, they all have really low profit margin. So we want to find the sources, and one of the sources is the cost of revenue. This is quite a new industry, and the R&D is taking up a lot of expenses. So
stop that. That's very good. Very good. That's exactly what I want to hear. Very good. Okay. Tell me about column M, debt to equity. Why are you going with debt to equity?
we want to see what is the capital structure of these companies. We want to make sure that these companies do not have really high debts, so they have pressures to make profits to pay back to the people who lend them money. I think
Are you sure about that?
the people that lend these companies the money.
Yeah. How do you, I mean, do you know enough about these companies to know how they got their major investment? Have they got them from banks? Have they got them from venture capitalists? Is it through equity? Do you know that yet?
We don't know that yet, but
Okay. So it's reasonable what you're saying, but you've got to be you've got to be a little bit careful. I mean, these are listed companies, so you should be able to find out who their backers are, but it's not necessarily the case to say that they feel they need to pay back their debts quickly. So debt to equity ratio may be, but I'm not sure. For a normal company, yes, absolutely. But for these companies, maybe not. Tell me about row N, share price. Why have you got that in?
We just put this in because
that's for fun. Yeah. Okay.
No, for consideration. But
return on equity.
Yeah, we think this is important because when investors they give money in, they want to see some returns. So this is how efficiently the company can pay back to the investor.
All right, but remember, I think you're in danger of kind of making the same problem in a different way. None of the groups have shown me a comparison of their company's share price movements, which I'm a little bit surprised by, and you'll certainly need to do that for assessment one. But you've got, particularly with these companies, you've got to work out, based on their annual reports, on the Yahoo Finance data, on what you read about them in the financial press, and you're going to have to do all of this for assessment one and assessment two. Are their investors expecting them to pay back? And if so, when are they expecting them to pay back? You know, venture capitalist doesn't then expect it to be paid back in the next 12 months. Venture capitalist, particularly for a tech company, they know all about inflection points. Everything we've talked about on this course, they know that stuff, you know, better than I do. So they're not expecting to get paid back straight away. The bank may be, but I'm not sure if these companies got their investment funds from the bank. So debt to equity ratio is fine, but it might be too early for these companies to bring that in. So you've got to look at that carefully. You might, sorry, return on equity. It might be a little bit too early to start judging these companies on return to equity. Okay, so I like what you're doing. I like your thought processes, but return on equity and debt to equity, just check that those are appropriate for this company. Total cash share maybe in the float. All right. Is there anything else you want to tell us in this overview?
So from our observations, we can see that the major weakness, but we don't really think it's a weakness. It's like a feature of this of companies in the industry. They have really high cost of revenue. So from the two companies that we have the data here, they have like up to 100% of cost of revenue, leading to like no profit or even like negative profit margin.
Very good. Very good. Yeah, that's very good.
Because this is at the early stage, and I think like this market is still developing, it's still growing. So they need a lot of money to fund their innovation process.
Okay, that's pretty good work, team. Pretty good. Like I say, just make sure you're confident on debt to equity and return on equity. I'm not sure that's appropriate, but I'll leave you to make that analysis. So I think there would be, if this was your assessment one presentation, there'd be one point I would definitely ask you about, because I'm not sure you've understood it correctly. Tell me again about why you think EB is so exciting. This technology in this industry is so exciting.
Because it because it helps to save petroleum. And
Do you know how long EV has been around for?
like more than 10 years, like 20 years.
About 50 years.
50 years.
Yeah, Ford and General Motors were making EVs in the 60s and 70s. So they actually developed EVs and then stopped making them. So the reason this is important is that I don't, and I'm not going to tell you the answer, you haven't properly understood why there's such big demand for EVs at the moment. And I hope you work that out in your pest analysis, because it's critical to this industry, absolutely critical. And I'm not going to tell you the answer because it'd be pointless, but EVs have been around longer than I have, and that's a long time. To be honest, do you remember the little car that drove on the moon? The Americans put on the moon in the 60s? That's an EV. Well done, very good. And you're beginning to understand how to pick the appropriate numbers for this industry. Thank you very much, Team EV, very impressive. I believe that Team DLT have finished their dinner and they're going to join us. So Team DLT, over to you.
We are DLT team. So Hương, can you share your hi guys, so we are from DLT team. Today we want to talk to you about the usefulness of blockchain in our life. So it means that in one day you need to transfer money through Vietnam to other country. You know, basically you need to 1 or 2 days to transfer money through the bank. But without blockchain, it can help you to do transaction within even less than 3 seconds. Yeah, I'm serious. So why it is important? I would say blockchain basically is to allow digital information to be recorded and distributed, but not edited. In this way, a blockchain is the foundation for the immutable ledger or recorded of transaction that cannot be altered, deleted, or destroyed. So blockchain application is a good way to develop and commercialize for many industries in the world. For example, we know Tesla use Bitcoin to do transaction, and the Walmart, one of the retailer in US, is one of the pioneer using blockchain. Currently, the brand has used blockchain to track the short of pork that imported from China. So blockchain that is very useful option to do identification, circularity, proof of authenticity, or tracking supply chain movement. And I would say the opportunity when the industry apply blockchain is a very, very huge that can be applied for almost an industry like fintech, insurance, music, or entertainment, something like that. So we already do the research on the financial health of some of companies that apply blockchain. Hương will tell you some of the main points.
Right. Okay. Yeah, so because it's kind of short time, so our team, like, we have formed like kind of basic number for all the company that we have, and so that the market capitalization, profit margin, revenue, and EBITDA. But we are also looking at other figures too, but because we haven't finalized that the figure that we use for all the companies yet. So we are looking at the news and also different figures, so that the debt, the share price, and the flow of on the chart of each company. So as you said, like before that, we were kind of concerned about the profit margin because it was negative or it's 0%. But then, like what you said before, was like because the technology is kind of
with the profit margin will be negative. So it's of course for the younger company, and for blockchain it's kind of new technology. So I think that's the reason why for these top 2 companies the profit margin is really super low. And for other company it's kind of stable 0%, but it's nothing interesting in these three companies. So that's what we found lately, and I think we need to have more figures for our assignment, and because like I think like we still need more research on all of these companies.
Yeah, well, Visify, you can see that when we talk about the capital, some index from financial, we think the market capitalization is quite low compared to other technology. However, I think we think based on the function, the useful function of blockchain, that can be attract more and more investor from the world. And nowadays the blockchain is acquire new definition. People think blockchain is something scammer or something like that, so they just want to invest money quickly and get money quickly from them. But it is essential. It is essential aspect we think that's going to be pumping in future. Yeah. So if you have any question, please ask it.
Thank you very much, team. All right, I see you're updating numbers. I'm just a little bit concerned that you gave us a description of cryptocurrency markets and you talked about how quickly we can transfer funds. Some of these companies are using cryptocurrency, but as I think I explained to you, the reason I changed these companies at your request, these aren't crypto companies, except maybe one of them. So I'm not convinced that you understand what these companies actually do and how they're using DLT. So maybe you do, but I didn't hear that from your presentation because you were talking a lot about crypto and transfer, and which these companies aren't really doing, or maybe one of them is. So I'm not convinced you understand what these companies do. So I will suggest that you go back and look at your individual companies and understand what they do, because I'm not hearing that these companies aren't really dealing with cryptocurrencies, except maybe one of them. So I haven't really, you've got here about the decentralized data, but I didn't hear in your explanation any understanding of what a distributed ledger is and how these companies are using them. So go back, understand exactly what your companies do. These are not cryptocurrency companies. They're using DLT tech. And then have a look at this again. As you said, these numbers are too basic. So as I said to other teams, you are going to go and have to do the work. You're going to have to do the readings. You're going to have to look at the references I've given you. You're going to have to understand this subject because those numbers are too basic for this industry. All right, thank you very much, Team DLT. And do we have Team FinTech here?
Hi, we're from Team FinTech. So
got a very good microphone. Over to you, Team FinTech.
Yeah, so let me share the screen. Wait a minute. Wait a minute.
Gosh, MV, it sounds very dramatic.
Sorry, but to be able to share the screen, I have to click the Microsoft Teams to restore the security and privacy on my computer. So
that's okay.
Okay,
It's
Maybe
technology.
we'll come later.
Actually, V, don't do that. Let me host it.
Teamwork. I love it.
Can you see my screen?
Oh, it looks like, yeah, here we go. Why fintech is important. Yeah, okay, over to you.
Okay, so let me go ahead and introduce you guys. Hi, guys. My name is V, and I'm from Team Fintechs. So to start with, I want to introduce the definition of fintech. So fintech is a short term of financial technologies, and it is defined as the integration of technology into the delivery and the use of financial service companies. So basically, fintech help businesses and consumer, the user, better manage their financial operations and process by utilizing the fintechs. And the most popular example of fintech is Momo e-wallet in Vietnam, which is I think it's the most familiar with you guys here. And Momo is a digital e-wallet that allow people to manage their financial here. And also another example of fintech is the peer-to-peer lending and the crypto exchange. So why the fintech is important? So there's two main point for these questions for the answer. First, the government has because of the revolution of the technologies, the government had regulate using the digital payment method and banking and credit. So it contribute to the role of the fintech in especially in the U.S. market, and moreover become because of the increasing digitalization of business and growing investment in the fintech company offer like a creative growth opportunities for this. So I'm finished with the fintech introduction industry. So now my friend Hui will talk about the SWOT analysis of our companies.
So looking at the main indicators, we wanted to make sure that the indicators are an accurate representation of where the company is compared to the competitors, how they are valued by the investors, and what indicators help us understand more deeply about where they are during their entrepreneurial phase. So out of all the companies, we picked Year-End Digital to do a SWOT analysis. So the strengths of the company is it's currently at the highest market cap based on its gross revenue, and it's even though it is in the market leader, it is able to maintain a positive profit margin. Its weaknesses, although it is a large company, its annual growth indicated by the quarterly revenue growth is less than its competitors, and that does reflect on how the companies are valued. So opportunities is fintech as a whole industry, based on the average of the revenue growth of the 6 companies, has a very high growth and it allows for opportunities for companies to continue growing, attracting more capital from investors. while the threats are obviously to fintech is the cybersecurity and the safety of people's financial assets in the application or the usage of the technology, and more specifically to the to Chinese companies, since this is a U.S. listed companies. Chinese companies that are listed in the United States are currently under heavy scrutiny ever since the 2019 trade war and the scandals where a lot of Chinese companies are updating false numbers or inflated numbers.
Okay, no worries. Let's just focus on your numbers for a little bit. Why did you decide to go with quarterly revenue growth?
So we wanted to see where during the most recent quarter how fast the company is growing. And although, as you mentioned, revenue may not be the best indicator of growth, it is a decent indicator, especially in the fintech where the commodity is mostly transactions with large sums of money.
A return on equity. Why have you decided to go for that?
Return on equity. We wanted to see if it was a good indicator for an investment. This one was still a questionable indicator, and we were quite, after looking at the results and 2 negative not available outcomes, we were still hesitant on if this is a good indicator of a good investment.
Probably not for this group of companies. If you got two not applicables, probably not. Which company do you think is most well established here and doing best?
So we picked Yiren because.
Yeah. Okay. So Yiren is probably not the company you would recommend in assignment 1 because it's established. Because it's probably going to be one of the others. So let me just emphasize this to everyone because I know people can get confused. We're not looking for you to recommend the company that's already succeeded, that's already hit inflection point. We want you to recommend the company that you think is going to hit the inflection point. All right, look, well done. I think that's quite good. The SWOT is. I'm going to give you some more advice on SWOTs. In fact, in this, well, actually, no, in our next class next week. So this SWOT, I know it's an early SWOT, and I didn't really ask you to do a SWOT, so I know it's extra effort. Thank you. That's way too qualitative. But we'll work on those. Look, my friends, I can see that it's. I do like to keep the talking down to 2 hours, and I can see it's 1:45. And there is something I need to talk to you about tonight. So if we can bear it, let's not take a break. And I'm going to give you some guidance towards the next task you've got to do. So in general terms, for that's your first ever, for a lot of you, that's the first ever time you've done something like this. Well done. You know, well done. That's not bad at all. So my main feedback would be the purpose of tonight's presentation was for me to see how you're looking at the numbers. Some of you are making some quite intelligent decisions about your numbers. But if you're a team that's using the numbers that you used last week, you're going to have to work harder, guys. I'm sorry. If you present the same measures that I gave you in week 1 in your assessment 1, it's not going to work out for you. You're going to have to do your research. You're going to have to look at the readings. You're going to have to look at the references. And you're going to have to understand which measures to use. You can't use the ones I used last week and no others. That's not going to work out for you, I'm afraid. So look, I'm going to talk to you. I'm not going to give you the full lecture, and it's an important lecture, so I'll postpone the main lecture until Tuesday. Gosh. But I am going to talk to you about PEST. So, and I promise to be finished in 16 minutes. Let me share my slides. And as usual, these slides are available to you in Canvas and on Teams. Oops, wrong button. All right. So, like I say, I'm not going to do the main section. I'll do that on Tuesday because this is quite an important lecture. But I am going to talk to you about PEST because this is the next thing I'm going to ask you to do in preparation for Tuesday. So, not always, but in general terms, and particularly for this course, like I said before, you will all do an individual SWOT on your company in assessment 2. You'll do the comparative financial SWOT of your 5 or 6 companies in assessment 1, but you don't do a SWOT on the industry. In principle, you can, but for this course, I'll ask you not to. We're going to use the PEST tool, and I think most of you will be familiar with PEST, but we're going to do it in a slightly different way. So just in case you're not familiar with PEST, there's a link there from the Corporate Finance Institute website, which is not bad for this course, by the way. So we use PEST to understand the industry. So PEST is basically looking at what we call macro factors. So factors that affect a whole industry, a whole economy, a whole region. And the reason that we do PEST is bang, right in the middle of the screen there. We're looking for opportunities and threats. And there are 4 main elements to PEST. You can see them on the screen there. Some of you might be aware of something called PESTLE, where we add legal and environmental to the analysis. Don't worry about PESTLE. We'll just stick with classic PEST. So I think certainly if you've studied business before, you've done PEST analysis. It's a very, very common technique. And in the same way that I talked about the SWOT analysis earlier, PEST analysis I've seen generally no use at all. Way too broad, way too qualitative, and way too subjective. So I'm just going to introduce you to a slightly different way of doing PEST. I think it's really quite straightforward.
Sorry, Professor.
Yeah, go for it.
We can't see your screen.
Oh, that's boring. Ah, and there's a reason for that, because I didn't press share. How's that now?
Perfect.
Thank you. Thank you for telling me. Yeah, okay, so this is the classic model. Like I say, if you're not familiar with PEST, go and revise it from the Corporate Finance Institute. There's many, many other references on PEST. I put some other references for it in Canvas. But you're going to do PEST in a more specific and, dare I say it, a more advanced way. So we're going to do a slightly more quantitative PEST. So instead of just generally describing items, I want you to get into some numbers, and I've already shown you some methods and tools that you can do a much more detailed PEST analysis quite quickly. All right, so I'm just going to go through these. They're not difficult, so I'm going to go through them quite quickly. So political, I haven't covered. I think the point to make about political is that for some of you and for some of your industries, it might not be a good idea to talk about the whole industry all over the world. And I'll take 5G as an example because you kind of mentioned this Team 5G in your presentation. The situation of 5G in Vietnam is very different from the situation of 5G on, say, east coast of US or southeast England. So 5G is still a growth opportunity waiting to be explored in Vietnam. So the growth story behind 5G in Vietnam is completely different to the story in, say, the major Chinese cities. So for Team 5G, you don't have to do this, by the way, Team 5G, that's just an example. When you come to give your PEST and your industry overview in your assignment 1, you might actually say, look, we're focusing on 5G in Southeast Asia, or we're focusing on 5G in Vietnam. Okay, so I think a lot of you have been talking about, or if your company is all US-based companies, you can focus on the US if you want, if you know about the US. Some of you have got companies that are Australian based, you know. But talking about 5G across the whole world or 3D printing across the whole world is probably too big. That's what I wanted to say about the political factor. Now for the economic factor, now the example I've taken here is we talked on Tuesday about the tech S-curve and smartphones. So I've taken smartphones as a little bit of an example here. So often when I see some pests, particularly written by MBA students who should know better, they say something very general about the economy, like, oh, the economy is doing really well, or GDP is high, or you know, inflation is too high. You can actually do much better. So this is for smartphones. These are some statistics that are readily available from Statista. Quite reliable. And I can use this, you know, this is hard data, and I can use this to show that, look, if we look at the S-curve between 2007 and 2014, we see rapid growth in smartphone sales. Of course, that's when they're being introduced. From 2018 onwards, we're seeing maturity or decline. So I've got hard economic data here that basically tells me that the smartphones have entered the maturity stage. You know, it's not a guess. Here are the numbers. So again, when you do your pest analyses, start looking for your quantitative evidence, and there's lots out there. There's lots and lots of business reports that are available to you, reliable ones that you can see free or via the RMIT library. So I'm expecting to see evidence and numbers and up-to-date numbers, you know, when you're talking about economic factors. Now for the social analysis on pests, this is a lecture we're going to do next week. But I think for this course, when you're going to do your social analysis and pest, you would probably be talking about market segments. And like I say, we're going to do this lecture next week. So you'll see a more advanced way of looking at market segmentation and users of technology. So I think when you're talking about social and your pest for this course, certainly look at your market segments. And there's plenty of other stuff to talk about as well. You know, don't just do this. But I'm going to give you a lecture on this next week. And for your T, your technology analysis and pest, we did it on Tuesday. Yeah, the tech S-curve method is perfect for doing an analysis of the technology and pest. It's the perfect method. And from what I've heard tonight from some of your presentations, I think a lot of you get this model already. And it's one of the reasons I showed it. It's a very easy to use model, and it's quite powerful. So look, you've got a whole set of methods I've already shown you to do a much more detailed and precise pest. And here's one way to show it. So this is a pest impact map. Now I filled it in very briefly for 4G smartphones. So this is based on the data I've just shown you. But the advantage of this map, unlike normal ways of doing pests, is I think you can see it. It's just basically for each element, you just do a summary of, okay, what's the positive impacts? That's on the right-hand side, the green plus sign. What factors are highly positive for the 4G smartphone industry? And on the left-hand side, what factors are negative, high, medium, or low? And by using this method, it encourages you to be less subjective and more objective. You're looking for positives and negatives on all of your P, E, S, and T. So instead of just thinking, oh, one positive thing about politics, one negative thing about economics, this method encourages you to look at positive and negative factors. So that's good for you. It helps you to give you a better analysis, because often some things that cause a strong positive impact will also have a negative impact, same factor. So I haven't filled in this whole thing, and I've done this in a very simple way just for this course. I didn't do politics, as I said. But even based on the data I've just showed you, I'm able to fill in positives and negatives for 4G. And this gives me the foundation for my industry overview in a much quicker and more precise way than a traditional pest analysis, which is just a bunch of bullet points. So I really do encourage you, use this impact map. I've used it a few times myself in real life. I think it's more effective. If you don't like it and you don't want to use it, that's fine. But let me just close on a final point. SWOT and PEST have two things in common: opportunities and threats. So I will go through this again with you, but I just want to make the point now because I think some of you may be a little bit confused about this because you've all been trained differently. Basically, all I've shown you how to do now with this financial SWOT thing, I've only really shown you how to do strengths and weaknesses based on the numbers, the internal measurements. So up till now, really the only things you should be able to tell me through the financial SWOT is strengths and weaknesses of each company based on the numbers. I'm now going to ask you to do PEST, and I want to see your draft PEST. You're going to present your draft PESTs on Tuesday. And I want to see the main opportunities and threats of your industries. Okay, so that's what you're going to have ready for Tuesday. Same kind of deal as we did today. The opportunities and threats that your pest analysis tells you will help you with the second half of SWOT. So you're going to take opportunities and threats from PEST, and then you use that to finish your SWOT. And I'll explain that more about that next week. But in summary, we'll kick off Tuesday's class with you giving an overview of your pest for your industry. And probably in this impact map format. I'm not expecting the whole thing, but I'd like to see what you think are the main pest factors for your industry. And it might be an opportunity for your team to kind of say, okay, where are we focusing? Is Team EV going to focus on the US market only? Is Team 5G going to look at Vietnam only? Up to you. Or are you going to do, you know, the EU or Southeast Asia? You don't have to yet. I expect you to probably have done that by assessment 1. But next time I see you on Tuesday, we need to have done the pest map first draft, so I can give you some guidance on that. Right, so we're coming up on 8 o'clock Vietnam time. I promise not to go over 2 hours on any of these sessions, so I'm going to stop there. Sorry that we didn't have time to do the formal lecture, and it's quite an important one, so we'll do that on Tuesday. Let me just say again, great start. You all obviously get it, and that's the most important thing. But like I say, go back and look harder at the numbers. And there's no shortcut. You're going to have to do your research, and you're going to have to understand what different numbers mean. I'll advise you once you show me a number, but I'm not going to tell you what the numbers are because there's no point. Whew. You must be exhausted. All right. Thank you very much. I'll stay on, obviously, if there's any questions or if anyone team wants to talk to me or if anyone wants to have a one-on-one. So feel free to log off now if you want to, no problem. Thank you. Have a great weekend. If you want to stay on and ask a question, please feel free. But otherwise, thank you. Well done. Good session. Good progress, actually. Feel free to log off and see you on Tuesday. Thank you very much. Well done.
Thank you, Professor. Have a nice weekend.
Thank you very much, Hengloi. You too. Well done.
Have a nice weekend, Professor.
I will try, but I've got to teach tomorrow, so it's not that nice. You too. Thanks.
Professor, can I have a question? Yeah. So I have a question about the float, the free floating shares of the company on stock exchange. Yeah, so from my reading, they say that the float is also important because it shows the company's opportunities, access to new capital. So they can have the money for their projects or their operations. So what do you think?
Yeah, but I don't think you've understood where the companies are at the moment. Do you have Yahoo Finance there?
I will open it now.
Open it up and share your screen.
Yes. So do I need to open my company's statistics?
You just need to know the symbols, tickers.
Okay. Yeah. I'm sharing my screen.
Okay.
Okay. Yeah.
Okay, put your chart into full screen.
Yeah.
So you've got summary selected at the moment. Just click on chart next to summary. Yeah, that one. And then on the right hand side, see where it says full screen.
Full screen.
Okay, now select a 1 year time period. Okay, select a 2 year time period. Okay, max me. Okay, tell me, what do you see?
It's flat.
No, it isn't.
Sorry?
No, it isn't.
It's not.
Okay, what happened in 2008?
2008, it dropped.
Right, okay. Why do you think it dropped in 2008?
I really don't know.
Okay, so for tech companies, when they list, it's very, very common that when they list, and this is NASDAQ, yeah. So this is one of the US. No, that's not quite right. Well, actually, in 2008, no, you are right. The US economy did tank, but that really hit the financial sector. So it's very common for most companies, in fact, particularly in the US stock exchanges and particularly tech companies, that when they launch, the share price is very, very high, and then it drops very quickly. And there's various reasons for that, which I won't go into. So it's not unusual, but this is quite a big drop. And you are correct. So this is say 2008 to 2022. Now give us a 5-year period, please. So over a 5-year period, now take a share price on a peak and on a trough.
This is peak.
Okay, so you got $5.42 on the peak, and just pick a trough, say 2020 March. Okay, so that's a substantial variation.
Yeah.
So when you said it was flat, it's not flat.
Yeah, when we zoom in.
Okay. Yeah, exactly. So, and this isn't really zoomed in. This is 5 years. Okay, now give us 2 years. All right, what do you see?
It's up here and then like slowly.
Okay, so what's the variation from the peak and the trough? So the peak, yeah, so that peak to today, so that peak is $4.95, and we're now down to less than $1. All right, give us a year.
1 year. So here,
338 dollars down to same again. And I think they've started trading now. So what have you just learned?
Like it's fluctuating, it's not stable.
Mm-hmm. Yes. Okay, go back to your 5-year.
Yeah.
There have been many points in 5 years that if we didn't know that much about the company and we were just looking at this chart, we'd say, oh, this company's got an inflection point, it's going up. but you can see what's happening. It's going up, it's going down, it's going up, it's going down. If you look at on this screen, if you look at 2018, there's a peak, and in 2019, there's a peak as well. The graph is almost the same shape. It looks like a building from Lord of the Rings. So something's going on there.
I think in 2019, they decided to enter the EV industry.
Right. Okay. And so that might mean that, you know, they've gone into a new industry, higher risk, and obviously the share market did not support them and started to pull out shares. Go to 2 years. So, but the point I'm making here at 5 years, I mean, it's going up and down. Now, do you know how to use a comparison function?
Is another company?
Yep. Yep. No, put them all in. Put in the other companies from your team.
Oh, okay. Here. Sorry.
No, sorry. Yeah, click comparison, then type in the ticker for the. Yep, exactly.
Okay. I need to look up. Yep.
Okay, what do you see? Well, you see a white screen at the moment, obviously. What do you see?
I think they, even though they have like different numbers, but the shape, it's kind of the same. Like they're all going down like here.
Very good. Okay, so why, and this is the reason that I introduced this method of using the share price as a proxy of company performance. So in real terms, this is a share price, which doesn't necessarily reflect how the company's really doing, but actually it gives us a good idea. So you're absolutely right. We see trends occurring on all of these companies. And if I looked a little bit closer, you know, actually Solo that's Mechanica. Solo is behaving slightly differently, particularly in November 2020. But in general terms, yes, you see the same things happening. So before you start getting really stuck into detailed financial measurements like floating point and floating share prices, which isn't really the point of what we're trying to do here. The point of what you're trying to do here is, as an entrepreneur and as a leader, to look at these 6 companies and understand this trend and what might be causing it. What happened in the real world? Was there something externally that caused this to happen? Probably, because all these companies are being infected in a similar way. Which company do you think might get to an inflection point? They've all looked at some point in the past, even on this graph. So again, looking at Solo, and that high peak that Solo's got in, say, November 2021, it shoots up there, and you would kind of think, yes, yeah, the company, it's taking off now. It's hit its inflection point, and it's going to go into the rapid growth phase. It doesn't. So for me, looking at these companies, the question I'm asking myself as an entrepreneur is, what are these companies doing? Are they doing something wrong? Why aren't they getting to an inflection point and going into growth? Is it something they're doing? Is it an internal weakness? This is why we do SWOT. Or is there something in the industry? Is there something in the pest? Why aren't they getting to the inflection points? Why are they peaking up then dropping again? Are any of these guys going to get to the inflection point, and why? So those are the questions you should be asking yourself for this course. So the question you originally started off, that's a reasonable question, but it's not quite so important.
Yeah.
What's important is that why are they not doing what they need to do? Why are they not getting into a sustained growth curve? Will they ever get there?
Yeah.
And again, I picked these companies kind of on purpose. They've got lower market caps than the really big EV players. So I'll give you a little clue to the point I raised with you earlier. The EV market is at the moment, regulation has a lot to do with the EV market and what some countries are doing with their regulations around EVs. So that's super critical in the EV market at the moment. It won't be for much longer. So the issue with your presentation was that you're saying, oh, you know, EVs are great and they're good for the environment. Well, they have been for 50 years. Something else is happening around regulation, which is really impacting the market and stimulating the market. And you need to understand that. I'm not going to tell you what it is exactly, but I've given you a clue. All right, so you and the team have you've got to understand the dynamics of what's going on with these 6 companies in the EV market. Once you understand what might be causing these, then you can go back to your numbers and say, okay, what are the numbers I need to be looking at? It's probably not the answer you were expecting, but this was definitely missing from you and from every team. So you're not understanding how we use this proxy S-curve to help us understand the strengths and weaknesses of a company. And this is quite advanced. You know, it's not.
It's very helpful for our thinking process.
Okay, so yes.
Yeah, so thank you.
Very interesting group of companies. Actually, I think there's a lot for you all to think about, and it's a real thing. You've really got to think these are real companies. This is really happening. Why aren't they taking off and getting into growth? All right, well done.
Thank you, Professor.
My pleasure.
Yeah.
Sorry, Professor. I actually have one question.
Yes, go for it.
In today lecture, you told us that the SWOT should be mainly used for the individual company for this course. How about the best? We understand that the best should be used to analyze the whole industry as a whole. Is it correct?
Yeah.
Or so for the next week Tuesday presentation, you want us to look at the whole industry and analyze the best for it. Is it correct?
So I want you to tell me what you think are the main opportunities and threats in the EV industry using your PEST.
Yes, we understand now. We are doing a 3D one. Okay, thank you.
So what's going to happen since you've asked me the question? So at the moment with your analysis, you've kind of shown me using your numbers, strengths and weaknesses in each company. And now that thing that Cindy just did with the chart, to me, I've now learned a lot about those companies by comparing them on the chart. It tells me a lot of information about how they're performing and how they're behaving. And the way that they're moving together indicates there's significant external factors. It's not a coincidence they're all moving that way at the same time. So your analysis so far has given me some individual numbers of the companies, so some possible strengths and weaknesses of the companies based on the numbers. But your analysis so far, of course, can't tell me opportunities and threats, because opportunities and threats are external. My company numbers only tell me about my company. They don't tell me about the external opportunities and threats. PEST should tell you what the external opportunities and threats are, what's going on in the outside world, which can help or hurt my company and my industry.
Yes.
Once you have the answer to PEST, then you can go and finish your SWOT for each of your companies. I'll explain that next week because that's a bit more complicated. But yeah, I'm expecting you to basically say, okay, this is our PEST. I'm not expecting the full thing. If you want to do the whole thing, that's fine. But I expect the first draft, and you're basically going to say, look, politically, these are the main opportunities, these are the main threats. Economically, main opportunities, main threats, blah, blah, blah. In summary, your team is saying, actually, we think that the EV industry is full of opportunity. Yes, there are threats, but, you know, let's go out and invest. Or you might say, oh, do you know, based on our pest, actually, there's so many uncertainties in the EV market. There's so many possible threats. And that's the reason why our companies are not hitting inflection point.
Yes, understand.
Okay. Obviously, this is more advanced stuff, but, you know, it's real. So, yes.
Yes, it's clear. Thank you.
Yeah. Probably not clear, but yeah, good question. All right, well done. Thank you.
Okay, have a nice weekend.
You too. And again, feel free to log off if you're done. Enjoy yourselves. Thank you very much, Cindy. You too.
Thank you very much.
See you later, Queen.